Hello and welcome to Fun Friday, a very special edition here. I think this is the first time on the show we've had two guests at once. This is going to be a very, very nutrient-dense episode and very tangible in the sense that this is a live rep showing everyone a deal here for Aspire. It is a 506C, and I've got a great team here. I have Branden with Tribevest, and I have Dasha, of course, who works at Lone Star Capital to go through the underwriting for the fund-to-fund structure. So welcome both to the show.
Thanks, Craig. Great to be here.
Thanks for having me
Awesome.
again.
Absolutely. Well, Dasha is the first repeat guest, so you have that title now officially of the first two-time appearance on Fun Friday. But without further ado, we want to be efficient here. What we're talking about here is the fund-to-fund structure. We've got, of course, Dasha, who's the Director of Investor Relations, and Branden, as I said, of Tribevest here to kind of go through some of the questions, and then we'll show you how to play with the model to make the fund-to-fund structure work. But with that said, Branden, do you mind just once more going through what Tribevest offers, who you guys are, and how it works together with Lone Star Capital, please?
Yeah, no problem. And yeah, like I said, excited to be here. My name is Branden Claisse. I'm the Vice President of Strategic Partnerships with Tribevest. At a high level, Tribevest has been around since 2018. We're a venture-backed startup, and we've been building the banking and collaborative infrastructure for the private investing world. And, our vision is to be the largest investment platform without selling or offering a single investment. So I think it's an important piece of this is we are a neutral third party. So we're looking to facilitate between folks like Lone Star that have deals and investor groups and fund managers and capital raisers that are out to raise capital for deals. And we sit in the middle and play an important role to facilitate that and make that as streamlined as possible. And so currently, and why we're here today is that we're focused on making SPV fund of funds safe, turnkey, and scalable. So, and that's important, and it's for both the lead sponsors. So we want the lead sponsor to be able to scale their capital partner channel, as well as fund managers to be able to not just do one or two deals a year, but 5 to 10 deals a year, and really make this a meaningful business for themselves. Because again, we've made it so streamlined and turnkey.
Yeah, streamlined, turnkey, and also cost effective, because we all know who have looked into funds that there are fees associated across the board, and there's a big what we call drag associated. Drag meaning recurring costs to the fund to set up on the front end, but of course the routine filings associated with the fund process. So we really are truly happy and honored to be working with Tribevest here, to be one of their preferred partners here, to effectively offer more people options, but also viability to raise equity into our offerings. With that said, Branden, can you please explain some of the services that Tribevest offers briefly to all the potential fund managers out there?
Yeah, for sure. And I think an important part of this, and we can dig more into this, is our go-to-market strategy for this SPV fund-to-fund offering is in conjunction with a partnership with folks like Lone Star, so that at that lead sponsor level. And that's really, really important, right? Because that's what I think allows us to do this, again, safely, turnkey, at a scalable point, and then also affordable as well, right? So all of that stems from that partnership. And so, to kind of go through this really quickly, the fund manager is going to work with Lone Star, and Lone Star is going to help them understand what those, fund-to-fund projections look like. They're going to help them, get excited about the deal. And at that point, they're going to hand them off to Tribevest. So there's already been, this discussion with Lone Star, and everyone's on the same page. And then that's when Tribevest can really spring into action. And so the services we cover are, we're going to help that fund-to-fund manager form their entity, their SPV fund-to-fund entity. From there, we can open a business bank account for them, and also provide them with all of their offering docs. So we're leveraging the lead sponsors PPM to create the SPV fund-to-fund offering docs. We also handle all of their blue sky filings. as well as provide them with an account manager. So that account manager is going to help them herd the cat, so to speak, get all of their offering docs signed, as well as all of their funds wired into their business bank account. And then ultimately, we're wiring a single, or they're wiring a single amount to Lone Star and into the deal. And the way this is structured is ultimately that entity is looking like a single LP on Lone Star's cap table. So they're providing a single distribution back to the fund and a single K1 back to the fund as well. And so what's nice is we also provide as a service automated distributions. So the fund manager doesn't have to worry about managing those distributions on a spreadsheet. We have a built-in cap table on our platform so they can push those out seamlessly. And then we handle all the annual K1 tax services as well. So that single K1 comes and we break that up and push it out to their investors. So the way we like to say it is it's all the stuff that a fund manager doesn't want to do. We handle all of those back office services. And it allows the fund manager to do the stuff they like, right? Which is find great deals, work with great sponsors like Lone Star, and nurture their investor network. That's what's fun. That's why they got into this business. They didn't do this to create entities and open bank accounts and work with attorneys. So that's Tribevest.
No, and I love that because as a salesperson, I have been in sales my whole life. The last thing that I like to think or want to think about is back-end administrative work. I want to just go and fly and not think anything else other than finding the deal and then putting the money into the deal. So the fact that you guys are solving for that really should open up a lot of doors and streamline people's lives and eliminate a hair pulling out process. So very cool there. Now, you mentioned a lot of great things that Tribevest does, but obviously there's a cost associated. So can you get into the costs associated with working with Tribevest, please? If the one were to work with Tribevest in Lone Star or with Lone Star, excuse me.
For sure. And, I think, like you said, I think the affordability aspect is part of this being scalable, right? It would be challenging to do 10 deals a year if we were charging $20,000 for each of these, right? You're really cutting into your opportunity to make money as a fund manager. So the affordability is definitely a part of this. And so we're charging $5,000 up front, and that includes your offering docs. So that's your PPM. So you're the GP on this deal and you're bringing in LPs. You've got your own PPM, your own subscription agreement, your own operating agreement, and then we're handling blue sky filings as well. So all those state filings are covered and handled by Tribevest. So that's the $5,000 up front, and then there's an annual fee, and that's based on number of investors. So up to 10 investors is $2,000. Up to 20 investors is $3,000. It does scale up from there, but typically we're finding that most of these fund of funds are about 10 investors or up to 20. Another nice aspect to this is we defer those payments until the fund closes. So we're not charging you up front. The fund manager goes out, gets all of the capital into their bank account. Once they're ready to wire onto Lone Star, that's when we pull out the $5,000 plus the $2,000 or $3,000 annual fee at that point. And so again, and one other point there I think is really important is back. I want to keep referring back to the importance of this partnership and doing a lot of these things up front. And so when we put together, or you guys put together the fund-to-fund economics in your underwriting, all of this is spelled out really clearly, right? So a fund manager is going to come into this with absolute clarity about what their investor returns are going to look like, what kind of compensation they can expect, and how their fund is going to cover those costs. which is super, super important. It's not gray or murky. They're going to know based on these projections, this is what it's going to look like if I can raise $1 million for this deal. So, and those costs, of course, being covered in that is an important part of that clarity.
Yeah, and that's awesome. And I think one really special thing about the fund manager process, the fund to fund structure, is it actually allows some people who maybe have never or work with some investors to invest in deals where maybe they wouldn't be able to hit the minimum requirement. For instance, Lone Star, if you invest directly with us, the minimum is 50K, but if you're working with a fund manager, you can actually invest $25,000 perhaps. So it actually allows some folks to invest in deals that maybe weren't able to before. So that is a nice kind of benefit associated with working in the fund to fund structure, and obviously, of course, in conjunction with Tribevest, which is great. With that said, also, and thank you so much for breaking that out so clearly with regards to the costs. Can you get into maybe some of the common questions or concerns people have when they're working with the fund-to-fund structure, Branden, and also just Tribevest generally speaking too, and maybe some of the conversations that you've had with fund managers on the onboarding process and kind of what these conversations look like? Because I have to imagine, like mine, they're very, very much so common, and there's probably redundant FAQs.
Yeah. So again, I think there's a couple different questions in there. When back to, and again, I'll keep referring to this, the two things, right? Is one, we're trying to make this safe, turnkey, and scalable. Two, it starts with the partnership with the lead sponsor. And so again, because of that partnership, all of these things are predetermined, which is an extremely different experience than if you just came into an operator with the desire to raise funds for them, and they didn't have any of these things, this type of a program in place, right? So because we have this partnership and this program in place, we already understand who does what, right? So you understand that you're going to provide the fund-to-fund economics to the fund manager and detail all those things that we just talked about. You also know that you're going to you can detail how you support them from a sales and marketing perspective. Super important that they know, I'm going to be able to get a nice pitch deck that I can edit. They're going to support me maybe on a deal webinar or whatever ways in which you do. But that's understood, again, upfront. And we have these very clean handoffs, right? So you're also talking to them a little bit about who Tribevest is, the way in which we support them. We do podcasts. So all of this information is, already, up front. So they're not coming in cold to these conversations. So typically by the time they get to me, there's quite a bit of information that's already been shared. And our conversations are pretty straightforward. So by the time I'm having that conversation, like I said, they're excited to work with Craig and Dasha. They love Lone Star. They are excited about this deal. They understand their economics. And now they're just looking to figure out how they're going to execute on their SPV fund to fund. And so, my conversation with them is really just walking them through the simple process. And what that looks like is, because all this information's been shared, right? You've shared the economics with us. You've shared all the deal information up front. We understand all the timelines, which is super important, right? Understanding those timelines, understanding what, kind of timing we're working with, having an account manager that's helping the fund manager kind of execute against those timelines. So we're kind of coming in armed for this conversation. And so at that point, we're helping them understand that, these pretty simple next steps, which we provide them with a fund manager worksheet. And that worksheet is just kind of their personal and business information that we need, right? Because we have to go out and file an LLC on their behalf. So we're dealing with the Secretary of State. We're also going and opening a business bank account for them. So obviously there's quite a bit of information and know your customer and things like that we're dealing with. And then we're creating offering docs for them. So we're of course leveraging Lone Star's PPM, but also we need their kind of personal information or information about any management entities or things that they're bringing to the table, so that all can be incorporated in. So it's pretty straightforward. And what's nice is, couple of things. One, we bring all this together and we can do this in 5 business days, right? So while they're out getting soft commitments and talking to investors, in parallel, we're doing all those things, forming the entity, opening the bank account, and creating their offering docs. And so in a week's time, they're able to bring their investors together, and we're able to help them with onboarding. So one thing we've realized is we want to keep this as, again, simple and streamlined. So there's really only 2 things they need to do, right? So they secure soft commitments. We do provide them with a soft commitment form if that's helpful, where they can get, all the information about their investors, how much they want to commit to, things like, are they coming in via a self-directed IRA? Are they coming in as an entity or as an individual? So we can help them gather that information if they'd like. But once they are done with that stage, it's very easy to take that information and then work with our account manager to, again, get all their investors to sign their offering docs. So that's all done electronically and with the help of an account manager, and then to wire funds into their fund-to-fund bank account. So again, we're providing those instructions. We're working with them to herd the cat, so to speak. So all of that's pretty straightforward. And I think for the most part, the fund manager is typically just appreciating that all this is being done for them, especially someone that's gone through this before, right? So,
Right.
Craig, I know you're in sales, right? And so whenever you're selling to someone that's experienced the pain, that's always the best scenario possible, because they know what a challenge it can be to go down to Chase Bank and open a bank account with an LLC and to do this as a passive investment or a fund of funds.
Yeah,
they
absolutely.
and they know what it's like to go have the back and forth with an attorney and how much time that can take. So there's usually that appreciation. And something we can talk about, I think one of the biggest challenge, right, or where the questions come, I think, is typically around kind of preconceived notions around, because they've done a co-GP deal before, or they've raised capital in a different way. And I think that bringing that, all the things that they bring to the table and how they've done things in the past, I think that's usually where we have to kind of clarify how the different aspects and how this is unique.
Absolutely. Well, and you've said so many great things there. So thank you so much for unpacking such an important premise and concept. And to your point, just streamlining the process. Raising equity is already a daunting task. It's not easy. It takes, a lot of effort and energy. So to know that you're supported via Lone Star with the materials that we provide, and then on the back end side, to not have to spend, weeks setting up the structure is so crucial. So you really are lending such an important helping hand to such a vital process to the private equity field and for the multifamily acquisition field for folks like us. So we just can't be more appreciative for all that there, and for us to be working in unison. It's such a level up for us as a firm. So we really appreciate that support there. I guess a question I have for you, and this is the time to brag, and I might be catching you off guard here, but give us the pitch. Why you guys, why Tribevest to work with you guys for a deal with Lone Star? What is your competitive advantage, and why do you feel like you folks are better than the competitors? We know why we feel a certain type of way, but why do you feel with your knowledge and expertise?
Yeah, it's a great question. I think first off, we don't think or really talk too much about competitors or competition. I think our mission, generally speaking, is we want to help kind of elevate this entire space. Like, we understand the importance of having capital partners as a part of your deals. That's a super important channel for anyone that's raising capital, whether it's in multifamily or other asset classes, whether you're doing a large raise for a fund or an individual deal. That capital partner channel is super important. And so, we really wanted to be a part of unlocking that. And what that means, and we're also happy to see people unlock it in different ways. So as you know, there's all sorts of people are coming at raising capital from a lot of different places. There are fund managers out there that are extremely savvy, have been around for years, have spent tens of thousands of dollars to create their own fund and create all their infrastructure and their sales and marketing machine and social media presence. And those people can, pretty seamlessly bring $2 million, $3 million, $4 million to the table because they've been doing this for years and spent the money to do it. And we're happy to see those people doing that. I think what we saw is that it was very challenging for the person that wanted to either get started in this space. It was new to raising capital. That barrier of entry was really tough. And so we wanted to help that person. We also saw that there were people that maybe had been doing this as a co-GP or in a different way that kind of got them into maybe a gray area, and that they, but wanted to continue to raise capital, but didn't have the bandwidth. So a lot of our fund managers, our doctors, our enterprise salespeople still have full-time jobs, are busy people, but wanted to are passionate about real estate, are passionate about finding great deals and sharing them with their investor network. And so we wanted to be able to support those people that didn't have the bandwidth to make this a full-time job. And so making this, again, safe, turnkey, and scalable really kind of was an unlock for those two groups, right? So if you think about, something that's very become very commonplace over the last few years in particular is these masterminds, right? There's lots of people educating and being educated about how to raise capital. And the fund-to-fund, SPV fund-to-fund model is becoming really the kind of go-to way to do this. And so people are coming out of these masterminds and they're well educated. And I think especially from a marketing perspective, they really understand how to kind of build that marketing machine and build that investor network. But I still think there was this gap, right? There was a gap where even if they had built their investor network or building their investor network, even if they were building relationships with great sponsors like Lone Star, they still had to do all of these back office elements that, as we both said, no one really likes to do. And that was like a gap, and that we felt we were just well positioned to fill. Again, we created this platform over 5 years ago, right? So we've been helping groups come together to invest, forming entities, opening business bank accounts almost instantaneously. And all of the kind of group dynamics is something that we've become experts in as well. So how do you herd cats and move them quickly to sign things, to wire money, to come together as a group? Those are all things that we've been figuring out for 5 years. So we just felt we were very well positioned there. And so about a year ago, when we added our chief legal officer, that was, a real, unlock as well. So being able to offer this fund-to-fund offering on top of something that we'd already been doing for 5 years really just positioned us well to create this SPV fund-to-fund offering. So I guess we've been doing this for a long time, and we think we bring a lot of expertise to the table. I think our go-to-market with our lead sponsor partners is an important element of what makes us different. I think anyone that were to just show up and ask a lead sponsor that hadn't done this before if they could raise capital in this way, I think it would be really challenging for them. And then finally, like I said, rising tides. If people have different ways that they want to go about raising capital and they can do it safely and in a streamlined way outside of Tribevest, more power to them.
Awesome. Well, thank you so much for the detailed response and all the incredible answers you sent over to me. And you also gave me, prior to this conversation, the most incredible cheat sheet and reminder of all the awesome benefits that Tribevest offers for us. So I will save that and also send that off to probably several other people who would find that very useful. So thank you so much for doing that, Branden. Turning it over now to Dasha. Tell me about your experience so far with regards to onboarding, maybe some questions people have had about the fund-of-fund structure as this is sweeping the industry. So would love to hear your insights, Dasha, because I know we're in the weeds of this, but some of your questions are likely the question, or some of the answers you have are likely questions that the potential audience could be having here. So would love to hear your insights and expertise on the matter as well.
I would say the number one question that I get is about the economics of a particular deal and the economics specifically at their fund level. Because as the audience may or may not know, the economics are going to be slightly different, just depending on the way that they want to structure their fund versus how we are structuring the economics for our LPs. And also there's some questions as to how to market those economics. So I've gotten the question a few times, should they be marketing our economics versus what their investors will be getting? So, obviously in that case, they should be marketing to their investors what their investors will be getting and not necessarily what we're marketing to our investor list. So there's just a kind of few clarifying questions in that regard. I've also gotten a couple of questions like, we're Tribevest everywhere. Do they have to work with Tribevest? No one's forcing any potential fund-of-fund managers to work with Tribevest.
It is recommended, of course, but yes.
Yes, we definitely do recommend, and that's why we have created this partnership. Tribevest by itself is already turnkey, but also now that we are partnered with them, we have processes in place so that Tribevest knows what we do. They know about each deal that we're doing, so it does make the process a bit more smooth. So we definitely do recommend it. But if you, as a fund manager, already have the infrastructure to create a fund of fund and do all the back office, that's no problem at all if that's what you want to do. Or if there's another provider that you'd like to use. And then another question that I get is, do you have to use all of the services that Tribevest offers? Obviously, if you've gotten this far in the podcast, you know that Tribevest offers a ton of services, and not all of them, you don't have to use all of them. If you want to use your own portal, for example, you can do that. So you can kind of tailor it to your own needs and make it so that this fund and this, as a fund manager, you can really kind of tailor it the way that you want.
And you mentioned several good points there, and more than several great points, I should say. But one of them that you mentioned is in regards to numbers, because fund managers do have the ability to frankly set up the structure more beneficial or less beneficial to their investors. So just want to mention that what we recommend and what our recommended structures are basically to provide one's fund managers, investors, and clients the same returns that it would be directly investing with us. So we want to make sure that those are mirroring and matching. Now, they can change, they can vary. Some fund managers want to get paid more during the middle as opposed to in the beginning, to kind of help with those ongoing fees and to also have, some extra income if that's a full-time occupation for said individual in the fund structure. So you do get some nice autonomy there, but just so everyone is clear and on the same page, this is in order to really mirror and reflect what our returns are like at the Lone Star level to, enhance the fund manager there, but to create no kind of advantage over us, so to speak, where we're not competing against your fund here. So just want to clarify that nuance because it is very important as we go through the structure more. With that said, Dasha, before we get into a segment that I would like to call bad radio, because you're going to need to have the spreadsheet in front of you to really follow along here. So if you're listening to this, you may need to switch over to the YouTube form of this. But with that said, is there any other items you'd like to mention prior to you busting out the spreadsheets and showing your incredible mastery of the fund-of-fund structure with regards to it being for Aspire, our most recent acquisition here in San Antonio?
Yeah, I guess I'd like to just touch on a little bit that, as you've discussed on this show, fund of fund really is the future of capital raising. Although it's been around for a decent while, it's really gained a lot of traction recently. And we've been thinking about kind of funneling in some of our partners into this fund of fund structure, and we haven't really figured out up until recently and when working with Tribevest how to do so. And So as far as like, I just actually remembered recently, I had a conversation with one of our partners. We've worked with a deal on a deal before, and we were talking about a new deal, and he wanted to raise for it and partner with us on this new deal, but he was really looking to do a fund to fund. He didn't want to be a co-GP anymore, and this fund to fund structure just made a lot more sense for him. The separation between the operator and his investors was something that he was looking for, and some various other reasons. And at the time, it was a little while back, as I mentioned, we didn't really have anything to offer. We said, we could offer you our legal team, but it still didn't really make sense. He would have to go get his own portal. Those are expensive, and figure out blue sky filings. He was wondering if we would do it. Long story short, he ended up not partnering with us on that deal because it just was too much to undertake all at once with not much notice, and also pretty costly, as you may imagine. So we're really thankful that there's a turnkey solution now, and I think also that it's such a testament to the turnkey solution that we have now, that we've been able to get a lot of our existing partners and new partners to try the fund of fund structure for the first time. So the process has been really great so far. Of course, since we do have a lot of people doing the fund of fund structure for the first time, there is a bit of a learning curve, but overall it's been a really great process, and honestly pretty smooth, even considering the fact that it's a lot of people's first time.
Excellent. Well, thank you so much. Now on to the segment of bad radio. Dasha, if you wouldn't mind, please sharing your screen and pulling up the awesome fund level returns for the Aspire deal. For everyone, yes, this is a 506c offering, meaning we are allowed to talk about this deal here with everyone on that's listening here. So with that said, would love to see the underwriting and dig in to show what the fund manager would earn, and then also, of course, what the returns like for the investors and how to kind of play with that there while we have an opportunity we can all talk about in real time. So Dasha, if you wouldn't mind getting that set up and sharing the screen, that would be incredible.
Perfect. So this is the underwriting for the fund of funds specifically. So we're going to have one of these for each of our deals. This is a 506c offering, so we're actually able to show this to the public now, finally. But I'll just kind of bounce around a little bit and make a couple of comments regarding this underwriting. So we're on the waterfall tab. And the total equity, which if you have our regular Aspire underwriting, you may notice that it's a little bit smaller, the total equity amount than our other underwriting. And this is because the fund of fund managers, we charge a lower acquisition fee than we do to the entire LP. So it's a 1.5% acquisition fee, and our normal and typical acquisition fee is 2%. So that reduces the total amount of equity in this fund of fund raise. So then there's this promote structure section, which will be detailing the terms that the fund will be getting with Lone Star and the LP entity. So there's a 9% preferred return, which will, after that, there will be an 80-20 split, this is referencing. And then after 15% return, there is a 70-30 split. And then when you scroll down all the way here, this is detailing a bit more about the actual terms, that the recommended terms that your fund will be giving to the investors. So this is based on a $1 million raise. This would turn out with a 2% acquisition fee that the fund manager will be taking from its fund.
And that's also a due diligence fee. And that due diligence fee is taken from, or typically speaking, what we recommend, a fund manager to charge at their fund level to their investors. So we don't pay that out to said fund manager. At the fund level, that is distributed from the investors' dollars directly to the fund manager. Is that correct, Branden and Dasha?
Yeah,
Yes.
1000%. And that, just real quick, I was going to say that separation is super important, right? Is that this fund manager is receiving preferred terms and leveraging those preferred terms in the delta between the preferred terms and ultimately the terms they offer their investors. That's how their compensation is coming versus something from the as being a co-GP or from the GP promote.
Right. Everything in order to be SEC compliant, as Travis has said, and you said, Branden, it's all about safe scalability. So
Yep, exactly. And so that's why, even though there's $1 million raise, the actual fund will be investing about $975,000. So that's the million raised minus 2%, which is 20,000, and then the 5,000 to Tribevest for the onboarding upfront fee. And then over here is detailing the terms that we recommend to the investors within the fund, which is an 8% preferred return up until a 15%. There's an 87.5% to 12.5 split, and that will just be going all the way. There isn't a second tier that we recommend, at least for this deal, to kind of maintain the same returns that we will be offering our investors.
Yeah, so why don't we, now what would be important, Dasha, and I think we're getting here to the conclusion of this, which is showing what the fund manager will basically be making on the deal. And then of course, what will the investor get? Because we're trying to mirror, as I said earlier, what our LPs would get with what the fund manager's LPs would get. So I'm very excited to see what this will look like and show everyone the great dynamics of what we're looking to solve for with regards to equity deployed.
Yeah, so down here, it is very clearly laid out what a fund-of-fund manager will be compensated. So upfront, there's that $20,000 acquisition / due diligence fee upfront, and then upon sale, it's about 102,000 projected. Of course, that is just a projection, and it is not a guaranteed compensation. But that is, according to our projections, what that will be the delta between the fund economics and then the economics to the LP investors within the fund. So exactly. The total compensation.
Yeah, I was saying the guaranteed. Yeah, sorry, the guaranteed word does not exist. The G word, we don't say it. But exactly as you said, and you said it so well. Tentatively speaking, that's what you can look to forecast.
Right. And then, of course, if we go above projections and we perform and under promise and over deliver, that might go up. Based on these projections, the compensation will be about 12.2% of equity raised.
Yeah, and that's on your $1 million.
Favorable.
Yeah, exactly. And
right.
what basically we're looking to solve for is basically, the co-GP structure, as many know, it's just, kind of a not the most sustainable or safe solution. This is definitely a incredibly safe one. And ultimately, if you're the co-GP or the fund-to-fund structure, you're looking to solve for about 11 to 14% on equity raise for you, the fund manager. So that is solving that. And then as you can tell there, Dasha, I think you're about to get into the fund-to-funder structures, but the returns for the LP. So if you could break that out, and then also maybe on your shared screen, go over to the summary that will show what our deal is looking like at our level.
Yeah. So as you can see here, the LP IRR is projected to be around 17.9%, equity multiple 2.12x, and the cash on cash average throughout the hold period will be 8%. So of course, we want to mirror our terms as much as possible that our investors are getting versus a fund of fund investors are getting, but it is up to the fund manager's discretion. So if you wanted to bump the numbers up a little bit, or if you wanted to, go the other way with it, the fund manager is able to do so.
Usually what we're seeing is that the cash on cash is slightly lower in the fund-to-fund process due to the ongoing fees there, but the equity multiple makes up for that in the back end for the lift for the sell. So that's the slight nuance. But as I said, we're basically trying to set up our numbers to look exactly similar to what the a Lone Star investor's numbers to look exactly similar to what a fund manager's numbers would be. So really appreciate you pulling up and do that tutorial. Dasha, I know you have to go, so we'll let you go there.
Great. No, I was just going to say, I think people need to appreciate how important what Dasha just shared is and how rare it is. One of the biggest challenges, and like we said, this is the safest way to go about raising capital for a deal. And so to be able to provide this type of deal level economics for the fund-to-fund manager is super, super important and rare. So if you were to go, to the vast majority of lead sponsors out there, very few are going to be able to provide this detailed information. You'd be left to kind of muddle through it on your own. and try and piece this together. And so being able to have this, right from the get-go and understand exactly, again, your investor terms, your compensation, and how your costs are going to be covered is a huge hurdle that Lone Star's figured out for you, and it's going to make everything super smooth from there. So yeah, I think that's a great piece to detail and look at closely.
And you know what I love, Branden, so much so, and Dasha just dropped off as she is the busiest woman ever, the heartbeat of Lone Star, so incredible. She's speaking with a potential capital raiser for one of our deals we have got going on here. But what I love and what Dasha loves too is the degree of separation that is created. We've talked about this before, but when one would work in the old co-GP capacity or bring investors in, they have to go through your portal. Well, we don't see nor interact with anyone's investors in the fund-to-fund process. In rare exceptions and occasions, I can speak with people's investors, although that's not really my role to do so. That is the fund manager's job to do that. But with that said, we don't see anyone's information. So there's a lot greater of a gatekeeping process associated with the fund-to-fund structure in the process compared to the old co-GP model, because we don't see any of that. It's one check coming in. We only directly work with and see that. So we can't, we literally don't see anyone's name, numbers, emails, any of that associated. Now, integrity and respecting people's clients is everything. It's a quick way to never have a capital partner work with you again. But for those who are not aware of the fund-to-fund process, that is an unseen benefit, as Hunter Thompson would say, in regards to the fund-to-fund process.
Yeah, no, that word separation is key to so many elements of this. It's key to the safety, right? So really the fund-to-fund separating the capital partner from the deal is a super important aspect. That separation of their investors and their investor network from the lead sponsor is, to your point, a really nice benefit. That separation allows them to kind of create their own brand, their own presence in the market. So it really is key to this. So love that word separation.
Absolutely. Well, we've done now an episode of Travis for the inaugural kickoff with the Fun Friday show. We did a show with Dasha, Rob and myself on our main YouTube page, which is Rob's page, of course, where this video will be going. We did an episode on the Fund to Fund webinar. We have a Fund to Fund document. And now we finally have Branden, of course, who I work in tandem with, that does the onboarding calls. I will be, excuse me, if you're a fund manager working with us, we'll be sending you off to Branden. So between the Fund to Fund webinar, the webinar I did, or the podcast I did with Dasha and Travis, and now this one collectively, and our Fund to Fund document, we hope officially you have all the tools necessary to crush your raise, to succeed, but you should feel educated and empowered to really level up your capital raising ability with this incredible SPV fund-to-fund structure and offering. With that said, Branden, where can people get a hold of you and reach out to you if they want to learn more?
Yeah, they can reach out to me at Branden, BRANDEN, at tribevest.com. And would love to hear from you, answer any questions you have. Craig, just really appreciate you having me on. Like you said, I think this is the future. The education is key. I think a lot of it is easier than you might think. And I think the fact that Lone Star's done so much of this work for you, and in conjunction with Tribevest, we're really handling all the pieces that you don't want to do. And so I think you're going to find this to be a very turnkey experience, and one that you can scale and really grow with as you kind of grow your capital raising business.
Well, you heard it here first. Branden, thank you so much for coming on. You absolutely knocked this out of the park. He also sent me a bunch of goodies as well, so I can send that off to you too if you're interested. If you're a fund manager, if you're a capital raising partner, if you got a 1031 exchange, and you're just or maybe you're just an LP investor looking to learn more about Lone Star Capital, reach out to me, of course. You know where to find me, but once more, it's Craig@lscre.com, CRAIG@lscre.com. For the Fun Friday audience, thank you so much, and we'll catch you next week. Peace.
Thanks, guys. Take care.